What expenses can you claim in your limited company? In today's video, I'm going to run through all of this and more, including some additional expenses you've probably never even heard of, but can help you pay less in tax. Before we jump to the video, make sure you hit that subscribe button and smash thumbs up so YouTube knows to share this amazing tax-saving content with everybody else. So the first place to start really is just by running through what types of expenditure and what type of expenses you'll actually incur in your business. So for most people, you probably started a business, so you have these types of initial startup costs, whether that's training, marketing, networking events. All of these costs are typically allowable. And also whilst you're running your business as well, all the day-to-day stuff, the rent, all of these expenses that you're going to incur whilst running your business, staff, salaries, these are also typically allowable. Also asset costs. So when you purchase machinery, iPhones, whatever it might be, these costs are also allowable as well. I'm going to run through later on the exact mechanics of how this works, so do keep watching to see how you do get tax relief on these. What does tax deductible mean? Because ultimately that's what we want. We want a tax deduction for all of our expenses. Otherwise, what's the point? So when it comes to a tax deductible expense, it's important to basically separate this from a non-tax deductible expense. So some expenses are specifically non-tax deductible. The main one here that a lot of people have probably contended with is business entertainment. So where you basically go take a client out for a fancy lunch, that is typically not an allowable expense, which means it doesn't save you tax. If it's just you entertaining yourself or staff, then in most cases this is allowable but can give rise to a benefit in kind charge. So how it works is, say for instance, you've got £100,000 of revenue, so turnover, money that's been received of your business, and then you've got £30,000 worth of tax deductible expenses. What you would have here is £70,000 worth of profits, and these £70,000, because you've received tax relief on that £30,000 of tax deductible expenses, actually what you're going to be taxed on is just that £70,000. If you would have had, say, an extra £20,000 of non-tax deductible expenditure, so the cash actually left your bank for tax purposes, your profit would actually be £70,000, but in your accounts, it'd probably be showing £50,000. So that's where you can get the mismatch. Same with capital allowances, as you'll see later on. And on that £70,000, you will pay tax. For most businesses, you're going to get the small profits threshold. So the first 50,000 will be taxed at 19%. But then that next 20,000 is actually going to be taxed at 26.5%, giving you an effective tax bill there of £14,800. So that's how you get tax relief, because essentially when you incur that expense, because you're paying tax on your profits, you're getting tax relief. Effective, the marginal effect, the top slice rate there would be the 26.5%. So whenever you spend £100, you actually get £26.50 in tax relief. That's what it means. Revenue and capital expenditure, what's the difference here? So revenue expenditure is basically an expense that you incur in order to earn revenue, and these type of expenses are shown in your profit and loss account. So all of, say for instance, all the example expenditure we're going to run through, but typically what you incur, so whether it's cost of goods sold, salaries, overheads, rates, light, heating, power, stationery, all of these are examples of revenue expenditure, and they're all pretty much tax deductible. So as a result, they're all going to be deducted when calculating your profit, and you should get tax relief on the vast majority of them. The difference here is capital expenditure, and this is basically where you purchase an asset or something which is likely to basically bring a future use. It's going to last more than 2 years in your business. Examples of this: iPhones, laptops, desks, camera equipment, machinery, cars, basically anything that's going to help your business earn money, but for years to come. And the way this is treated in the accounts is basically the whole cost of the asset sits on your balance sheet because it's an asset. So that's where the assets sit on the balance sheet. And then what happens is it gets depreciated over its expected life. So say, for instance, we expect that phone to last 3 years before it's worth nothing. Then what you'd actually do is you'll depreciate the cost of that phone over those 3 years. Say for instance it costs £1,500, £500 a year might be recognised as an expense, depreciation. Basically the cost is written off over that 3-year period. And then as a result in the accounts you'll get, basically you'll show that £500 is basically being written off, and that's what your profit is in the accounts. However, for tax purposes, it's usually completely different when it comes to assets and capital expenditure. The reason for this is most businesses will qualify for the annual investment allowance, which basically exempts most of your qualifying purchases from basically being subject to the depreciation from a tax point of view, and instead you get 100% write-off in the current tax year. So say for instance, we'll go back to that previous example, it's just before the end of the year, because for the timing of all of this expenditure, in order for you to get tax relief on it in the current year, for it to help your current tax bill, you have to either basically pay the money or receive the asset or receive the service or the benefit during your company's accounting period for it to save you tax in the current year. So say for instance, in this case, you know that you've got £70,000, you've called up JSM, you've called up your accountant, and we've said, okay, yeah, here's what you can do here. Basically, if you were looking at purchasing a new phone, purchasing a new laptop, potentially a new company car, you wanted to refurb the home office or your actual premises, actually we'd say to you, yeah, let's get that done now, because as a result, that £70,000, if we can put through £30,000 or £40,000 worth of qualifying investment, if we put £40,000 through and you get 100% tax relief, actually that tax bill is going to go down from being taxed at the £70,000. That's going to go down to £40,000 or £30,000 if you've got the £40,000 worth of tax relief, and as a result your tax bill is going to be much, much lower. So that's a great way to help lower your tax bill now, is if you are looking at buying things that you can invest, camera equipment, whatever it might be, make sure you do it at the back end of the current accounting period if you are looking at purchasing it soon, rather than start the next accounting period, so you get tax relief sooner rather than later. Examples of common revenue expenses that you probably are going to incur in your business: accountancy fees, office expenses, stationery, salaries, website costs such as domain and hosting, software costs if you're an online business, maybe using ClickFunnels, if you're a landlord, Hammock, Xero, marketing expenses, business cards, flyers, adverts, or training expenses. So for instance, you're an accountant like myself, a tax advisor. Obviously, for us to be the best at what we do a lot of training, and trust me, tax training is not cheap. But all of this stuff is because it's required to help me do my job as best as I can. That is a tax deductible expense, and it will be in your business too. All of your annual updates, all of the basically the training you need to go through in order to stay on top of your game, that is tax deductible. Same as licenses, interest expenses as well. So if you are a property investor and you're watching this, you probably used to mortgage expenses not being tax deductible in your own name. In a limited company, fully tax deductible. I'd like to just stop the video here just to let you guys know that we are taking on new clients in our accountancy firm at JSM Partners. So if you want to get the latest tax saving information directly from your accountant who's working alongside you to help you minimize your tax bill, rather than having to watch boring old YouTube videos on the joshuatharby channel, not that they are, then absolutely now is the best time. We're offering a free discovery call for anybody who books through the website. You can click that link below or head to jsmpartners.co.uk and click join us, and then you're able to book a free discovery call at a time that suits you. Back to the video. Examples of capital expenditure. So briefly we've touched on earlier, a little bit more detail here. So laptops, absolutely there, an allowable expense in terms of you are going to get the AAA on that, and as a result 100% tax write-off. iPhones, iPads, furniture, desks, basically everything that you need and is going to last a couple of years in your business, that is tax deductible. Cars and vehicles, absolutely electric cars as well. You can get some other type of capital allowance on that, which basically 100% of the cost of a car can be written off at the time that you purchase it. So actually investing in your business to help grow machinery can be a great way to grow the business and also do it in a tax efficient way. There are some additional tax deductible expenditure you've probably never heard of, but ultimately it's going to help you pay less in tax. The first one is salaries, but not for you, for spouses and for children. So ultimately, yeah, you're probably going to be paying yourself a salary from the business for the work that you do. But also, if your spouse is doing some kind of work for the business, helping you with admin, helping you with this, ultimately you can pay them a salary. And if they've got their personal allowance free, it should be fully tax free for them. The same with your children as well. As long as they're, I think it's 13 years old, you can pay them. And as a result, so if they help with the shredding, the social media marketing, posters on TikTok, whatever it is in your business, you can pay them a commercial rate for doing this. They've got their personal allowance available. So absolutely, it's going to be a great way to get a tax deduction in the company and get some money out tax-free for your family. Mileage costs. If you're using your car for the business, if you're using your personal car for the business, you can claim the 45p per mile flat rate. Anything over the first anything up to the first 10,000 miles is 45p. Anything over and above that, you can claim at 25p. Even better, with all of these deductions, you don't actually take the cash out of the business. What you can do is leave it in there as part of your director's loan account, take it out at a later date, completely tax-free. One of my favourites here as well, business travel. So if you're going somewhere nice, effectively, just because you're going overseas, going to Spain, going to Dubai to do some business, doesn't mean you can't get a tax deduction on it if you happen to go to the beach in the evenings or on the weekends. So it can be a great way to get a good tax deduction there. At the minute, a lot of great training events are taking place in these hot tropical climates just for this reason. So it's a great way for you to pay less tax, get some fantastic knowledge, and also have a bit of a tax-free holiday, because ultimately it is for the purpose of your business, but you do just happen to get some personal benefit from it as well. So it's absolutely a win-win with the business travel. Company clothing as well. So if you've got any clothing that's got branding on it, then you can put this as a tax-deductible expense. So if you had a cheap old t-shirt, but I put JSM on it, which I did do in the past, that made it a tax-deductible expense. So it's completely allowable through the profit and loss. Got tax relief on that. And then I could wear that clothing completely tax-free. So that's a great way to lower your tax bill. Pre-trading expenditure. So you can go back up to 7 years from when you started your business, and any expenses that you claim, might be initial research, initial marketing, you can claim them as if they incurred on the first day that you started trading. Interest payments on your director's loan account. So where you've got that director's loan account of all the money that you've put in, all of the money that your company owes you, you can charge interest on that as you would with any other loan. That's tax deductible in your company, and for a lot of people can be received tax-free or taxed at a very favourable rate. We'll head on to the last ones now. So home office expenses. For a lot of directors, you've got a flat rate that you can claim, £6 per week. Or alternatively, you can look at, if you do have quite substantial, you spend a lot of time working from home, you can actually look at renting a portion of your home. You have to calculate all of the bills that you have, look at your usable area, and actually add that up and say, okay, I might spend 20% of my house, 20% of the square footage or 20% of the rooms basically working from home, and then roughly look at what that's costing you. You can rent that from you personally to your company. So as a result, your company gets a tax deduction. On your personal tax return, you'll need to report the income, but ultimately it's going to match the expenses that you've incurred. So you shouldn't pay any tax on a personal level for doing that. And the last one, and often a favourite, is pension contributions. Your company can make pension contributions directly to your pension, and it's fully tax-free and it's fully tax deductible. Even better yet, if you use a SAS or some kind of SIP, you can have other benefits such as being able to invest in property using that type of pension vehicle, but that's one to check with an IFA. And that's all for today, guys. I hope you've enjoyed this YouTube video. Please do give it a big thumbs up and smash that subscribe button. Better yet, got a friend, family member or business partner who could benefit from this video, do yourself a favour and send it over to them. I'm sure they'd appreciate it. That's all for now. See you next time.